Hi, and welcome back again to Tim Bigham's Big Time Options, Edges and Hedges. Taking a look today at 3 reasons to finally be bullish on Apple. It was a little over a month ago that we were telling you about 3 reasons to finally be bearish on Apple based on our usual fusion approach. How things have changed in that time frame. Now we're starting to get absolutely a more bullish lean to Apple, given the fact the stock has dropped over 10% because price does matter. So as we said, we like to take that fusion approach. We look at fundamental analysis, technical analysis, and probably most importantly, implied volatility analysis. So let's jump in and take a look, shall we? Here's that previous video right from December 2nd. Here's the link for it. You can go to, and here is the kind of the rationale on why we were getting a bearish viewpoint on Apple at all-time highs, right, which proved to be very prescient. So highest valuations ever, along with overbought technicals and dirt cheap options, sets up ideally, we thought, for a put calendar spread in Apple. Indeed proved to be the case. Had a very nice winner on that. Fast forward to today, and we'll take a look at what has happened with those fundamentals. So back then, you can see price to sales was over 10 times, right? PE at over 38, right? PE approaching the highest levels ever. Price to sales at the highest level ever. We can take a look at that compared to where those are now. So the PE, which was over 38, now under 35. Still not dirt cheap by any stretch, right? But softening dramatically. Certainly that multiple has come down. Price to sales, which was over 10, as we said back then, the highest level ever, right? Now under 9, so that has come down sharply too, making Apple a little bit more attractive, certainly from a fundamental basis. On a technical basis, here's a look at the chart. Here's where we came out with that trade idea, 3 reasons to be bearish. Actually proved to be the absolute top, at least for now. So a decent call on our point proved to be prescient. But you can see how things have changed. The stock was getting overbought, as we said, technically back then in early December. Now getting oversold. We're looking at 9-day RSI at basically the lowest level over the past 12 months, right? MACD reaching extreme negative readings. Bollinger percent B just turned negative once again, right? Shares trading at a big discount to the 20-day moving average. Back here, they're trading at a premium and approaching that kind of critical 250-ish support level, right? You can also see previous times when technicals got this oversold on all these metrics proved to be pretty good times, right, to be taking a bullish stance on Apple here, looking for the stock to at least find a floor, if not rebound. So every time Apple has gotten this oversold, technically has proved to be a good time to jump in and take a bullish or at least a non-bearish stance on Apple. Then finally, our IV comparative, right? We always like to look at that. Here was the IV back then in early December. You can see 60-day IV hugging at about the lowest level we have seen. IV percentile only 10%. Under 20 on kind of a generalized IV for the first time in a long time. You can see IV had sunk from the previous day. And here's a 6-month chart, right, on basically the slightly out of the money puts trading at the lowest IV we have seen over that time frame. Not only did that make options cheap, as we said, but it's a good contrarian sign, right, that perhaps things are getting overdone. Lows in IV many times correspond to highs in stock prices. Compare that to now, and we can see on the IV perspective, IV has popped here, right? Now trading at about the highest level we have seen over the past several months. You can see it moved higher from yesterday to today. Now that current IV at 26, when we looked at it before, was only at the 10th percentile, and the generalized IV right now over 30. You can see just a few weeks back it was under 20, and when we did the trade it had gotten under 20. So IV certainly has popped. You can see here Feb IV up sharply right now at 30, right? Back then, that Feb IV, as we said, at under 25. So things certainly getting a little more pricey. A fear coming into the market, and spikes in IV almost always correspond to lows in the stock. Here was the IV back in December when we had a bearish viewpoint on Apple, when Apple was richly valued on a valuation basis. The technicals were overbought and IV was at an extreme low. Now you can see how it's rocketed up. We're reaching levels where IV's at an extreme high, right? Technicals definitely oversold. Valuation's not cheap, but definitely cheaper than they were. And you can see the two previous times with IV when it spiked proved to be times where the stock found its footing. We're looking for that to happen again. So combining fundamental, technical, and IV analysis in Apple certainly makes sense. We can also take a look at comparative as we did before on Apple versus the S&P 500. You can see Apple back in early December starting to get out over the skis in a big way, right? Outperforming the S&P to a large degree, normally fairly highly correlated since Apple's one of the biggest components. Seasonality was pointing to January being a bad month in Apple, right? Hence we put on the trade, right? Proved to be prescient there as well. February certainly looking like a more bullish type month for Apple, so perhaps the lows are in an Apple here. Also from a market cap perspective, back in early December, Apple was actually pushing Nvidia to regain being the largest market cap stock in the S&P 500, well over a $4 trillion market cap, right? Compare that to now, where that market cap has now shot to under 3.7, and Apple has fallen to number 3 behind Alphabet or Google. You can see that basically Nvidia has gone nowhere in the month and a half or so. Apple has fallen sharply, right, from 285 to 245 roughly, over a 10% drop, which many times is a sign that things are at least due for a bounce. That's all we're playing for here in Apple. Take advantage of a oversold stock. The valuations have softened dramatically. More importantly, IV is now rich enough to sell. So the trade idea is simply go out selling out of the money Feb put spread, the 230, 225 put spread, right? Bring in just under $1, 95 bucks for each time you do the trade. 5-point wide spread, so your risk a little over 400 bucks. So your return on risk almost 25%, which is nice. Only 30 days a month to go. And you can see Apple closed at 246.70, so that 230 put over 16 points out of the money, still almost a 7% downside cushion. So even though Apple's fallen over 10% from the highs, right, this will position to still make money if it falls less than another 7% here. So the fact that IV has jumped means you can get further out of the money for the same net credit. You do have earnings coming at the end of January, but lately Apple has not had those earnings, huge run-ups, and certainly given the fact the stock has come down so hard, that will soften any earnings impact. So hopefully provides insight into how we go about identifying trade opportunities. We're certainly not stuck to a bullish or bearish thesis, right? We let the market tell us what to think, if you will, based on fundamental, technical, and most importantly, implied volatility analysis. And right now it's saying Apple is looking like it's about to put in a floor over the coming month or so. So until next time, as always, here's to good trading. Take care.